This is Alan Bush with the Daily Financial Forecast for Tuesday, August 16th. Starting out with the stock index futures, first of all, yesterday we did see the cash indices making new historical highs. That would be the S&P, the Dow, and the NASDAQ yesterday. However, today, some profit taking coming in as we are a little bit lower in all of the major indices, but it does appear to be on relatively light volume. Also, we did have a series of economic reports today coming in, I have to say, a little bit better than expected. Longer term, we do feel that stock index futures will continue to advance, so we are looking for higher prices at least for the rest of this year. And it is the fuel behind this market of low interest rates that will dominate. This is the influence that will take precedence over all other indicators. Even though we do appear to be overbought by some standards, low rates are more important, and this will continue to sustain the bull market in stock index futures. Now, moving over to the currencies, seeing the dollar index under a little pressure today. For the most part, I would have to say ignoring some of the better than expected economic reports this morning. But I think the dollar index is lower more so because of some of the reports that we're getting overseas. For example, the German investor confidence number coming in better than expected. So that helped the euro currency at the expense of the dollar index. Also, we have inflation numbers in the UK coming in better than expected, coming in up 0.6% against the guess of up 0.5%. So that helping the pound, once again, at the expense of the US dollar index. Also, the yen advancing as traders getting indications that the Bank of Japan may be having a hard time finding bonds to buy as part of their stimulus program. So if the Bank of Japan cannot buy all the bonds that they need, that means interest rates will not be pushed down as much as they are hoping for. And that, of course, then would be bullish for the yen. And, of course, the yen now moving to a 7-week high with today's gains. Also, the Canadian dollar and the Australian dollar trading a little bit better as we did have crude oil advancing earlier today. Longer term, though, we do feel that the pound will probably work lower. Longer term, we do feel that the dollar index will probably edge higher, which are both contrary to what we are seeing just for today's trade. Now, moving over to the interest rate futures markets, there was some strength in the bond market earlier with the 7:30 reports, the housing starts coming in on balance a little bit on the weak side. All of those gains given back, though, in the bonds lower with the 8:15 capacity utilization and some other reports coming in a bit stronger than expected. We do feel that the inflation levels that are rather limited right now in the U.S. and globally will ultimately accelerate, and that will be the headwind that takes the bond market, we believe, lower. So any gains in bonds should be used as a selling opportunity. Also, while inflation is a negative on the bonds, it is a very bullish aspect and influence for the precious metals. So any breaks in gold and silver should be used as a buying opportunity. There's a lot left to the upside in both gold and the silver market. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.